5th, it's Saturday. The Dow finished up 0.5%, S&P a little bit over 0.5%, the Nasdaq down 0.64%, Nasdaq 100 down 1.15%, and the Russell 2000 down a little bit over 0.35%. Let's get into what happened on Friday. Make sure that you like, share, subscribe to my videos. We did call this out on my channel. We kept telling you guys reversal, reversal, reversal. Even in this video, telling you the levels, reversal, reversal here. Telling people that, right, like, why would you guys go long if Google was losing money, if Tesla was losing money? This is why it's so important for you to get your information from the right people. If you guys want to continue to watch other people who don't know what they're talking about, don't know chart patterns, don't believe in them, don't talk about macro, fundamental, technical, right? You're gonna have a hard time in this market. I'm telling you, and I'm standing on it now. We have the videos, we have the member gains, we have the receipts, and a lot of people choose to listen to less than 2 minutes of this video, and then they wonder why they're eating Hot Pockets out of their mom's basement working at McDonald's. So one of the big things I want to get into here is the number one mistake that traders make is, I'll show you a chart right here, right? A lot of people are going to talk about how there's a big gap here in SPY that needs to be filled. One thing and one way to figure out where you should walk away from people and why a lot of people don't know what they're talking about is there's no gap here. I just switched to the 20-hour time frame, right? People are talking about gaps up here. There's no gaps, guys. Right? What you see right here is a big red control bar. You need to stay tuned. You need to listen to all the information I'm saying in this video. I'm trying to help and protect you, save capital. No, it's not financial advice. I call it common sense. Okay? This is a control bar. It's controlling price. Until you get over this control bar, I'm not going long here, okay? We can look for structures, we can look for scalps, but I want to pump the brakes on this, okay? On the 20-hour time frame, we did lose to 55 institutional support here. All my levels that are marked here, right, 95% zones, 95% zones, 95% zones are squeeze zone to the upside, they're squeeze zone to the downside, all hit again, right? You have an inverted hammer up here that we notated here on Tuesday. Again, all this stuff is in the video, guys. I'm saying this a lot because a lot of people, I see my stats, they watch like 2 to 3 minutes of the video. Guys, yeah, of course you didn't know the market was going to drop if you watch 2 to 3 minutes of the video. All I talk about the 2 to 3 minutes on the video is mostly just some of the Nasdaq gains, this and that, market overview. Then I go into my member gains. The ironic part is when I'm showing my member gains, right, there's like not a lot of attention on those sides. I guess people don't like live, transparent copy trading, right? I don't know. So here on the S&P 500, and I'm upset, guys, because it's like I'm really trying to like stand on something. I'm putting my neck out there every day. I'm saying the right things that are right in the market. I'm showing you the education portion. A lot of people can't spend 5 minutes. They'd rather spend 5 minutes watching a silly YouTube short. So right here you have a control bar on this price here. So right, if we're gonna drop a fib on this, right, and obviously you rejected right at that 50% line, which I always tell you guys to pay attention to, right? That's why it's a 95% zone that was gonna tap. We talked about that. And right now you're kind of in a do or die situation. If we go back here to the, so there's no gaps to be filled here, right? There's definitely structure that we can fill, like maybe micro gaps here, but again, on a 20-hour time frame, you can see this is just a straight up clear control bar. Think about this as one red bearish engulfing candle. That's what you have here. On the daily time frame, we just bounced above and we did close above our support. So the good news for the bulls is that we did close above our 55 EMA institutional support right here. So that's a really good thing. We closed at looks like 738.93. And one thing that I'm looking for into Monday, right, if I'm gonna take micro scalps for calls, is go ahead and mark your pre-market highs, okay, your pre-market lows, and then what are you gonna do with that information, okay? If you come over here to the ES, right, remember that I did notify you guys that we did have an evening star. It can be corroborated by this picture. What do evening stars do? They plummet, right? Obviously, you have to watch structure to make sure that it has continuation to the downside. Usually what you want to see in an evening star reversal candle is a big bearish Mabrizu candle here to the downside. We did have a morning star that did get invalidated over here, right? I saw a big bullish breakout of the candle, but then we did see that inverted hammer that we did notate here over on the SPY. I'm going to go ahead and just give some clean levels for you the next week to watch out for. I'm going to go ahead and do it here in real time. So one thing I want to do here, right, again, is I just want to go back to the 20-hour time frame here. There's a lot of other things I can mark, but one thing that I'm just going to mark right now is I'm just going to drop my fib here, and I'm going to mark my levels. We're going to sweep down to the bottom, to the lower side here at 735.14. We're going to create a double bottom, maybe create a large inverse, or we're going to undercut, retest, and then break down or break up here. The first important step here in trading is making sure that you have your levels marked out. So we have our levels marked out here. We're going to mark our 50% line here in red for a wall. One of the important levels that you really do want to get back above is the 743 level. And again, the thing that you don't want to break here, going back to the daily time frame, is we don't want to break our 55 EMA institutional support, which we did close above here. This is a big key level here, okay? And then going over back here to the ES, a little bit of a divergence, you could say, because on the ES here, we did close below our 55 EMA support here. So a little bit of divergence there. Looking here at the RSI, a lot of people say RSI doesn't work, but then I tell them, like, okay, maybe give it more than a weekend, you know, while watching YouTube shorts, only 2 minutes of people's videos. And again, one thing where, you know, people think I'm mean, but I'm not mean. It's like, it's your money, guys. You can obviously, you're going to choose to do what you want with it, right? But if you're giving something no more than like 2 minutes of a video, you're always going to think every concept doesn't work when it does work, right? So looking here at the RSI, obviously we have our divergence points marked out up here. A little bit of a divergence as well because we did close here lower on the 55 on futures, ES, but then here on the S&P 500 here, the actual ETF, we did close above. Going here to our levels that are, I don't even need to drop fibs, that are important here, are kind of marked right here. So right, I told you to mark out your previous day highs, your previous day closes, previous weekly lows, previous daily close, and then previous daily low here. So we can just mark those levels. We don't have to mark the same levels as here. Maybe they correspond, maybe they don't. I don't really think it matters. And we're gonna go over here to the Nasdaq in 1 second here. So we have our levels marked again. Maybe we double bottom, maybe we create an inverse head and shoulders. But right now, what do I know? On both charts here, I do have a big control bar. So Wall Street is controlling these price action levels. You can see these are control bars, right? Because what happens? What happened here? Right, 50% rejection, right? What happened here? 50% rejection here, right? And again, a lot of people don't understand that concept, right? Showing you right here again, rejected here, okay, rejected here. These are pivots. Mark these levels, right? If you're gonna mark any levels, mark these 2 levels. I'll mark them right here. Rejection, okay. Rejection here. And then we have our previous weekly low. These are really good levels here to mark. These are 95% zones heading into next week. 95% zone, 95% zone, 95% zone. So you can pause the video, take a screenshot of this. If you're interested in joining the Discord, go ahead and hop in. It's interview only. Then we're going to take a look here at the Nasdaq over here. Apologize, I have a bunch of charts open. I have a lot of work that I was working on over the weekend. Here, if we're taking a look at the Nasdaq here, we did finish below that 55 EMA institutional support, and this is one thing I'm really concerned about. This is your wall. We do need to get back above 700. This is a big wall, so go ahead and mark that level here. At this specific level, you can see that's a 50-50 zone. Why do I call it 50-50 zone? Because people have a 50% chance, right, in a market that's usually tilted against you, to pivot and adjust if price is not going your way, right? You don't have to do 0-day options, right? You can look at maybe 1 week out, 2 weeks out, right? And if obviously you did that, then you'd be having a really good time, right? Even if you're wrong, you can still be right. That's my principle. Looking here at the MTF rate of change, we obviously are below our 0% line. Again, another kind of clue here that I tell people is go ahead and just mark your 0% line here. Really under it, bearish, above it, bullish. Okay, so we're gonna mark it just right about here. So obviously I'm gonna see that curling up here to obviously where we, get past the 0% line, then we can create structure and kind of go up here. Just another confluence I would like to use here with charts. Can go ahead here and mark our levels. From the top here where we rejected all the way back down here. Okay, so we have our 50% zones right here, and one of the big things I want to get over here is I want to get over that $700 wall right here. One level that's very important is that we're going to come back here and maybe retest 693. That's my first level. That's my 95% zone for the week here, heading into Monday, maybe Tuesday. Oh. So we have 95% here that we're going to crash and break that again, maybe pre-market. Here's my next 95% zone here. My next level to the downside here is 668 here, heading into next week. Then your 95% zone to the upside here for next week. and this is a big pivot level here. Okay, this is a really good gap zone here, called a squeeze zone here to the upside or downside, right? You get back into this liquidity here, you have a chance, right? No different from how up here, if you didn't catch that move, to really get involved and active in a trade. All these charts here. I think a lot of people, they use one chart. I like to use 6. I like to use 6 charts because there's a lot of different things happening in different time frames. This is one of many trading view windows that I have open. Notice how it looks messy. Your chart should look messy, right? Why? If you throw on any indicators, right, you have a lot of different things and items happening. So why wouldn't you have multiple charts marked out with a lot of different things? That way you can go back and reference notes. No different from how the market's a test. You know, you have to practice. What is practicing? Annotating and logging the work. Proof of work, right? So going over here to the SOXX, looking at the 55-day EMA here, right? We did have a reversal of conditions here. Our rate of change should flip negative. We have a bit of a divergence with the volume here. Nothing to really notate here. Let me go ahead and just mark up the chart and show you the levels that I'm concerned about. I did mention that we can come back into this bearish channel. We had this bullish channel up here that we broke down here on. So one thing I'm going to do here is draw my levels here. Looks like you're hitting for a double bottom. We did lose our 55 EMA institutional support. And if you remember what I told you in the market on Monday and Tuesday heading to earnings, that we have no leaders. So if the SOXX isn't leading, right? It can't just be leadership. It can't just be tech. We need other sectors. We need other tickers, something else to step up, right? It can't be this, right? When we're going down, who's going to go up, right? Well, if it's just Dow Jones eroding to there, right, that's not going to be enough. Tech rules the market, and right now tech is in big trouble. Right now, it looks like you're forming inverse head and shoulders. Maybe come down here, double bottom here on the SOXX. Create your inverse. Here's your bearish channel right here. You can kind of see it clearly. You do have an evening start here in progress. You have a doji right here. What I'm looking for, a continuation of the downside to know that we do have a true bearish reversal of conditions, is I need a big engulfing candle. Right now we have one in progress, but not really fully enough for I feel confident, you know, going short on a stock like this. Why? Because you can see, and actually if you look here, right, kind of similar things here. What I'm looking for is at this zone here, maybe you retrace up here to 534, followed by a rejection to the downside here. So here's your 95% zone right here to the upside. That is a reversal of conditions, maybe to look to get involved in here for a long, to look at structure, or it could be obviously, right, a short. A lot of people try to like talk about, you know, this and that on streams, but I think at the end of the day, right, I need to be in front of a chart, live viewing, versus, you know, just talking about hypotheticals. But if I'm going to talk about hypotheticals, at least I understand the logic, rhyme, and reason to why I should be, you know, looking at some of these different stocks. Again, right, you can't look at charts. You don't know, you shouldn't, you'll have a hard time using volume, rate of change, Fibonacci's, EMAs, all, you know, institutional support. You're gonna have a hard time in the market, guys, if you don't understand some of these basic principles, and it comes from the candles. If you can't understand the candles, you can't understand indicators, and that's what I truly believe in. Okay, a lot of people talk about, oh, up here, oh, down here, right? Well, yeah, your EMAs are pushing up here, which is bullish, right, on a 520, maybe on the daily, but here on the daily, right, maybe you have an evening star pattern here. Maybe you have a bearish engulfing counter here, right? So all these different things are really relative to how you read price. But a lot of people, again, aren't willing to watch 5 minutes of a video to understand, right, hey, like every single day, right, again, go back to all these charts. I have all this work done. I spend about 15 to 18 hours a day charting sometimes. Why? Because I truly believe in helping people. So right here, you might create your bearish channel, come down here. You could undercut, right? Undercut looks like this, right? Come up here, undercut, retest, breakout, right? So maybe come down here, undercut, retest, breakout. Or maybe we come back up here to your 95% zone, like I mentioned, right? Undercut maybe right here. We did come back up here, retest, breakout, obviously, but we have to read price action and structure in real time to determine what it's going to do. Right now, it's bearish. We close under the 55 EMA institutional support. That means that we don't have institutions. That's just the way I view it. Okay. If you take a look here at Micron, we do have a head and shoulders, obviously, that played out left, head, right. We did lose our 55 EMA institutional support. Your 55% zones here for retracement are right here at 930, here at 944, and maybe you retest right here near that 55 EMA at 946. And then your obviously big move here to the downside would be right here at 858, your 95% zones here for the week. Obviously, a lot can happen over the weekend. We don't know really what kind of geopolitical factors might pop up, but obviously here from a macro, from a technical perspective, we can get some kind of ideas of like what might happen here. If we oh my lord, I just made a mistake. Oh, okay, I just made a mistake. Okay, well, good thing I caught that. Let me just double check here. Yeah, I did. Okay, so that's why it's important to double check your work here. I almost just misspoke here, so I apologize. Let me go ahead and just, I guess, rechart this here. So right here on Micron, we did have an evening star here on the daily time frame. We do still have our 55 EMA institutional support. My 95% zone here for the week would be undercutting here this 55 EMA institutional levels just slightly. So right here at 885, I'm going to go here and mark my fibs in a second, but we do currently have right now on Micron a evening star. If you remember what I posted on my YouTube video, out with Micron and with Hynex, right? Obviously, well, that happened, but now both are selling down, of course, because all of tech, right, is selling down. That again is why it's important to go macro, fundamental, technical, and then you go index, sector, stock. So index, right? What index, sector, right, tech, and then stock, right, stock. So a lot of people will try to go long on Micron or short on SanDisk when it's the same sector, okay? It's a different stock, right? But then you go macro, okay, right, fundamental, technical, right? And then what do you have, right? All oversold, all have evening stars, all have the macro and geopolitical risk, right? And then all have that fundamental use case. That's how you combine all those things together. If you drop our time frames down here, but first let's just mark our levels here. You can do it from the top down over here to where you think your base is, or you can do right here. What I'm doing it is from our current peak here to where we kind of rose up from. So we're going to mark that here, level, and I have my level right here, and then I have my level up here, and then I have my level here, and then I have my level here. Okay, so right now, obviously, remember what I told you. Some people say, oh, there's gaps right here, this and that. Please run away from them. They have no idea genuinely what the fuck they're talking about, okay? Right here, what I'm looking for is a possible inverse head and shoulders stepping up here. Again, your 95% zones are right here at 880, okay? And then your upper extension here for maybe a dead count bounce or retracement, depending on whatever is set on Monday, is up here to 963. What we might have next week is just chop. So chop looks like kind of this, where price really isn't moving. So this is a little bit of chop here, from a daily perspective. Not that. I mean, this chop hasn't really been choppy at all, so it's kind of hard. But I would consider like something like this chop. I mean, the range is very low. Like, what is that? Like 709 to, 812. Compared to, I guess, like bigger candles like from here to kind of here. So yeah, bigger moves. Another way to kind of check out how big your moves are and kind of get an ATR, kind of average true range here, is just get your price range here. So like kind of how big has, Micron been moving here for the past, X amount of days, right? You can kind of get those ranges here. So again, a big tool that I like to tell people about here in the stock market is a lot of people try to look at stocks and determine, hey, let me get Micron puts for, 400. Let me get Micron calls here for 1,200, right? Well, we use this price tool right here. You can figure out if that's really realistic based on the price range here or not. So if you just drop again your kind of price range tool right here, go all the way down here, well, you're expecting a 45% drop, really, bud? And then right here to the upside here, expecting a 33% move, and then kind of figure out, right, if you're full of shit or not, or if somebody else is, right? But just look at the range here, right? So this guy's expecting here, that's calling out whatever bogus stuff he is expecting maybe a 50% move. And that's where you can get really, really technical and just kind of understand like a lot of the stuff in the market, again, not financial advice. I always call it common sense here because, right, what can you do? You can understand that, wait, Micron's never had a, 44% move, right? But then, obviously it says 85, but, it's never had a 44% move, right? But then there's people out there, calling for 44% moves to the upside and or downside, right? So getting your average true price range here really does help you determine to get better levels, to also understand better strikes, picking better options, and maybe getting rather not involved in a trade rather than a lot of people getting involved. If we drop this down to the 20-hour time frame, right? I'm gonna drop it down here to the 7. What do we have here? Hello. Okay, here we go. So maybe a gap here. I'm not going to go back into it. I mean, that wasn't really truly a gap anyways. But my point was no different from QQQ. Just check all your time frames, right? Had I just continued the video, I would look like a fool marking Micron out here on the 5-minute time frame chart. You do again have that head and shoulders left, head right here that's playing out here. Again, you can still come back up here, retest your neckline. Maybe this was just an undercut, right? Retest, breakout, or maybe we're going to undercut, reject here, and then come back down here, and then you create your double bottom right here. So look, what that looks like is this. Double bottom here, create your bearish channel. This is a bearish channel until broken, and then it's not just about breaking it like, cause oh, hey, but right, if you kind of look at the bearish channels here, if you just draw a basic trend line, kind of look where you broke out from, right? Yeah, kind of, I call it peekaboo, peekaboo, rejection, right? Peekaboo, rejection, right? So this is a peekaboo or rejection. So that simple trick right there can help and prevent you, right? I'm not saying the 15-minute time frame is right for this. I'm just trying to show you the principle of kind of how I like to approach the market here. Just draw your trends here, right? You break out, break down, break out, break down, break out, break down. That's where you can kind of find and identify your bearish channels here. So if I'm looking for micro to the downside, right, just needs to come back in this bearish channel, at least from a 5-minute time frame here, right? And again, maybe we come back up here to this 55 EMA institutional line. I like to use it on the daily. Some people like to use it on the 15. Again, for me, it's a daily, but again, the principle is maybe come back up here, retrace a little bit, dead cat bounce. Maybe this is your inverse head and shoulders. Here's your left, here's your head, here's your right. And then you create structure and then obviously break out, while also, you know, chopping and so forth, or right, breaking down, okay? Still have serious things to talk about here. Again, we still have this 3 right soldiers. I did say that, you know, you can retrace a little bit here. Not really concerned about something like this. You see bogus, silly articles like here. Stocks waver on Wall Street while crude oil prices fall for the first time in a week. Sometimes a lot of people act like, oh my gosh, it's falling. I'm like, it should have never been up here in the first place. So a lot of ways like to just dismiss people when they say silly things is like, oh, it's dropping. I'm like, it should have never been up there. Oh, it's ripping. No, it's not. You know, like there's a lot of different things that I pay attention to, right? And again, from a macro perspective, we have our what, right, and our why. From a fundamental perspective, we obviously have our what and our why, and from a technical perspective, we have our what and our why. Again, right, when you see something like this, I tell people stay out of the way. You're never gonna win, right? I don't need to trade this. What I do need to do is pay attention to it. So a simple concept here to where I can understand maybe where you know, price might kind of retrace to is maybe we come back down here to 82. You know, maybe our first spot right here is at 88 here. Again, this is just a chart that I'm using. The hard part for oil and some other services, right, is it's headline and kind of geopolitical driven, right? So in a split second, right, we may have a 20% candle, or you know, we may not. And I'm not saying 20%, right? I mean, maybe like 1%, maybe 2%, right? I mean, the way some of these stocks are moving are kind of volatile, and a lot of people forget that. Like, people are laughing at, like, you know, people are calling for crude oil up all the way up here to 200, right? All the way up here, right? And you might think that's crazy, even if you're seasoned, even if you study crude oil. But I would tell you, like, why not, right? Because, you know, the same people that will dismiss your theories and kind of structure and TA for crude oil are the same people that would dismiss it for gold. But guess what happens? Some of the people that kind of stuck around for gold, or some people that just looked at gold, right? You know, oh, it's not going down. It's not, you know, like, why not? Right? So people will justify how gold went up. It was undervalued. Okay, says who? Who are you to tell? Who are you to say it's undervalued? Right? Who are you to say that it's X, Y, and Z? Right? No different from me. But my point with that saying is, right, while people will dismiss crude oil rocketing up here, are the same people that dismiss gold crashing all the way down here, right? The same people who bought up here, like they did the Bitcoin, right? Look at Bitcoin's chart, right? It's the same chart, guys. And again, I keep telling you, one of my favorite charts to do is just go look at Bitcoin, go look at MSTR, go look at all these stocks. They get you in again and again. Gotcha, right? So if you want to avoid having that happen to you, where you pick these bogus stocks here because, you know, you're not sure of kind of what to pick, I really enjoy teaching, helping you walk you kind of through those different items. Right? They got you. They got you again and again, and they probably got you here again as well. Okay? Forgot about was you also have an inverted shoulder as well. So you have your left, your head, and obviously your larger macro time frame of your right shoulder to create your inverse head and shoulders. Kind of looks like the Bitcoin chart a few months ago. And then obviously you do have your bearish inverse head and shoulders. A lot of people don't know this. If you go ahead and just invert your chart right here, you can kind of see right here, kind of the same thing happened here. So there's a lot of ways I kind of read the chart here. Bullish pennant, break up. There's a lot of ways I kind of view the chart here. It's all about your perspective, and I really tout myself on I look at the market in very creative ways, and that's what I like to teach people. Don't do everything that everybody else is doing. Maybe do the thing that people think is crazy. Conjunction with my chart over here that I think it's helpful to pay attention to here is just look at the three charts here. We got the YM, the Dow Jones, we got the QQQs, we got the Nasdaq, right, and then we got the S&P 500. So kind of going over here, just kind of recapping everything. Basically, we finished flat on the S&P. We were down here on the Nasdaq, and obviously the Dow Jones was up. So basically, right, when you see a green Dow with a red index distribution, right, that's not strength here, right? The Nasdaq is supposed to lead the market, right? Right? It's not strength, right? You have to trade the leader, right? And that's why you saw a lot of other stocks here on Friday, even though it was a bloody day, going up here, okay? Kind of the second point here is obviously the weekly damage, right? The week of the 20th to the 24th, it was the second straight week down for the S&P and the Nasdaq, right? And the third for the Dow overall. We've had 2 weeks down on the Nasdaq, we've had 2 weeks down on the S&P, we've had 3 weeks down on the Dow Jones, and then we've had basically the Nasdaq 100, the first back-to-back since late March. And the Mag 7 on Thursday, lost $800 billion. So the index that leads the bull market is now leading the decline. So we do have a change of structure. So right, the market that was leading the bull run, right, is now going down, and it's leading the charge with everything else. On Thursday, we did have that real damage, and I think Friday was just kind of catching up to what everybody was thinking about, and also Wednesday with the earnings. Basically, we had 4 catalysts in one session, and none of them resolved by Friday's close. And obviously, the big movers there were the Alphabet CapEx guide. They raised it to 7.1%, saying they're going to spend more. Tesla did miss its EPS really bad, actually, and the negative free cash flow of negative 14%. And then obviously, we had Brent crude oil smash through 100 on the Red Sea escalation. And we obviously had the 10-year yield run to the highest since it has in January of 2025. The VIX, though, is maybe the biggest thing that's perplexing everybody. It's only at 18.70% at the time of this recording. And, you know, before in the past, we've kind of had this volatility. Usually it's at 25, 26, 27, 30. Can it get there right? We have to watch structural market changes to essentially, understand that. Here's some more information here. Gold's holding 4,000. Brent crude is just about 96. WTI crude is at 88. We have the US 2-year at 4.33%. We have Bitcoin at 65,400, and then we have the US 10-year yield did ease Friday at 4.69%. So we did have a bit of relief for one headline, and people were kind of wondering, is it going to reverse into Friday? And that was oil, and also yields. But again, nothing was structurally repaired. We have a band-aid on after we just kind of scraped your knee. We have a big boo-boo with an open wound. That's how I kind of view that. So we have 2 choke points here in the market. Brent didn't break 100 on the 13th night of the strikes. It broke on the second choke point, right? So the Strait of Hormuz here, it has 20-25% of the world's seaborne oil normally transits here, and effectively closed since the IRGC began attacking merchant traffic. We did have the U.S. naval blockade of the Iranian ports in force, and we also did have the shipping firms suspend operations. And now we have the new issue here that a lot of people aren't paying attention to is the Red Sea issue. Basically, the second export route is now also under attack. So this is under attack, and now the second export route is under attack. Houthi rebels begin targeting Saudi ships this week, and Brent topped 100 for the first time since May, and the Saudi Civil Defense issued and then rescinded Yanbu warning. So 1 choke point is a risk premium. Now 2 is a supply zone. So we do have to size it accordingly, and right, this is the macro, the fundamental, the technical portions that people do miss in the market. So the escalation ladder, just kind of recapping, what's happened here since the Nasdaq kind of topped out here, is essentially, right, July 6th through 7th, 3 merchant ships attacked in the Strait of Hormuz. 7th, Trump declares the June truce with Iran over. 11th, CENTCOM begins consecutive nightly strikes on Iran targets. July 23rd, Houthis target Saudi's ships in the Red Sea, and Brent tops 100. And then July 24th, 13th straight night, Bandar Abbas struck, and also 4 were reported to be killed in Abbas. And then obviously next week, we have the US-UK meeting in London on a Hormuz shipping coalition. And basically, the stated doctrine, right, is every vessel Iran hits in the Strait of Hormuz, that a U.S. takes out an Iranian bridge or power plant. Trump has also threatened to widen the campaign to nuclear sites and infrastructure. He keeps doing these things, but he's not doing anything. So really, we have to wait for him to do it. The problem is if we wait and he actually does it right, does that mean the Nasdaq is just going to collapse and completely implode? Or maybe the market kind of views this as bullish, right, because he actually finally strikes Iran. And I think that's maybe the differing factor here. If we strike Iran, we end the war, Trump actually does what he says he's going to be doing for months, not like this bogus, Gestapo crap that, he's been doing with the tariffs still haven't been resolved. I can tell you right now, if this ends up like the tariff issue, right, and Iran keeps striking, the strait is closed, we're going to go into a full-blown recession. The only actual hope in the market right now is Trump, not for his taco tweets, it's for his taco doing. What is he going to do? Is he actually going to end the war, take them out, or not? This actually all falls on Trump. 690 calls here for KQQ right before 11:59. We were very patient while everybody was rushing, getting involved with that. Let's see how our members did with that 690 call here. Let's go down here to member gains. This is how you know my members are winning and really kind of learning the structure and kind of everything else. I woke up really late. I was kind of burned out, which I described in the video of the day before. But let's see how our members did because they took some of their own trades. And shout out to y'all. Y'all are really learning, and this makes me really happy to see. So Void went in here, made some profits here for the day, 523. Chris took some two M&Q shorts here for 542. Matthew on his funded account had a 523 day right here. Joel 162 there. Matthew again, oh damn, he's doing even better. $800 day right here. Hunky right here initially was at 724. He did later on, you'll see, go to 2000. Looks like Trish had a really good day right here with Apple, 359% here, $151. Chris looks like he did go long after going short, so now that's looks like close to $1,000. Looks like Triss's call right here went bang, 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 almost 1,000% play. Good job, Triss. Joel looks like he had 357 here. Looks like he had 265 here. Looks like Void hit 88 here, 121 here. J Bob had $2,460 on his funded account. Void had $130 on his QQQ puts. Looks like he also had Tesla puts for whatever, blah, blah, blah. Looks like people took my 698 calls and did really well here. Looks like Mashi had 580, 572, 110, 117, 67, 272 on some of those calls and puts. Looks like Void finally had a really good day here rating structure with me. And then he also caught an IWM reversal. Joel here just on the leg fucking chilling like a villain, $87. Good job, Joel. Looks like Roshan here made $160 here, $180 here. Right, we like to scalp on our Discord. Looks like J Bob made another $1,800 right there. On his funded account, looks like he's at $4,000. Miggy's where you at, bud? Roshan made overall for the day $1,333. Looks like J-Bob made $111 right here. My point is, guys, I'm going to go through all these, right? These are all gains, all on stream, all verified, right? It's your choice. Let's watch.